Welcome all to the node. I am Mike, aka Veteran Crypto, and David will be joining us here shortly. But there is a ton going on news-wise today. Honestly, kind of still trying to figure out where to start. But with that being said, let's go ahead and jump on into it anyway. So, it looks like Canton has a bunch going on, and as always, this is where I like to go. A really good website if you're bullish on Canton, cantonnews.org. So if you want to check that out, it's again a really good place for Canton focused news. Um, but let's see. This is one that kind of caught my eye. That's T-Rise. So anybody that's a fellow, aerodrome lock holder like myself, you might recognize this T-Rise. Months ago, it was part of one of their launch pads, or ignition, or whatever it is they call it for the new apps. But if you voted for the pool, you got an airdrop. Hold on one sec, gotta sneeze. Sorry about that. But we got an airdrop of this token, and it is an RWA project that was launched on Base Network. So this is something I've been keeping an eye on, and we need to do. Actually, let me make a note. We need to do a deep dive on this because it is. Oh, there's David. An interesting project. So, David, how's it going?
Good. For the last, I don't know, week or so, been getting up at like 5:15 with no alarm and basically like right to work by 6, man. So I've had an entire day, and now it's noon. And, for a lot of people, I think the day's just starting. So like, this is pretty cool, man. Not going to lie. I've never been a morning person ever in my life, but just over the last like month or so, completely changing my diet, getting sun every morning, working out every day. And dude, I'm waking up at 5, like never done that in my life. It's amazing. So yeah, doing great.
How much more you can get done, as opposed to staying up late, being an early riser. It's just, when it's light out, it's just your body, just kind of performs different.
I still stay up late.
Well, it's just, but it's just, me personally, I get more done when it's light out. It's just my body knows that that's time to, to get stuff done. So, but
yeah, but doing good though.
Yeah, excellent. So I was just going over this project T-Rise, and it's one I wouldn't mind doing a deep dive on. It's a tokenization play, but it was launched months ago on the Base network, and me and other Arrow lock holders got an airdrop of it for basically just for having locks, and then voting for it. But it looks like they locked 30 million Canton tokens across 2 Canton featured apps. So it says T-Rise has locked 30 million Canton across 2 network featured apps under CIP 0116, funding positions in tokenization, risk analysis, and decentralized MLFL. So
machine learning. What's FL? I don't know what FL is.
I don't know. Let's see if we can figure that out.
So that's like, what is that, like $4 million of Canton that they, I guess that they staked or locked?
Dollar amount wise.
Well, I mean, if it's 15 cents and they staked 30 million tokens, then that's like, 4 million or so, something like that.
Roughly, yeah. So I'll just read this. So 30 million Canton commitment is set at the level required by T-Rise's pipeline. That position places the company inside Canton's core featured application reward economy, where rewards are tied directly to the real activity generated by an application. Issuance, risk analytics, and decentralized machine learning each produce that activity. The more institutional throughput the applications drive, the more the structure returns. So the throughput must be qualified. But throughput is not granted, it is qualified. Every asset that reaches issuance through the applications must first clear a structuring and qualification standard covering eligibility, collateral logic, covenants, disclosures, and governance. Most assets do not clear that standard. Those that do are institutionally deployable by construction, making the resulting activity real and the rewards durable rather than incidental. Um, this is where the model compounds. Qualified issuance concentrates activity into a narrow set of workflows, while the economic layer powering these workflows scales with everything they carry. The capacity lock is sized for the volume those standards are built to admit, rather than the volume currently on the network. The objective is to structure that upside in a balanced way, allowing rewards generated by the featured apps to reinforce the wider network through application growth, issuer activity, user participation, and long-term utility. So I really want to do a deep dive on this T-Rise. It touches a lot of things. And now that they're on Canton, it touches base network, it touches aerodrome, it touches tokenization, and now it touches Canton. So I really want to take a close look at the tokenomics of T-Rise and see if it has that value capture, that we like to focus on. Because if it does, I'll probably start building a position up.
Dude, Mike, the more that I learn about Canton and everything being built on there, the more bullish I become on it. And also, the CC token too. So what's the ticker for this thing, T-Rise?
I think it's just Rise, if I remember right. Let me look it up real quick.
RIZE USDT. So is it RiseNet? Is that the...
Let me see.
I think I might. I don't know if I have the right one. I'm hopping on over to.
It's getting some serious freaking volatility and price movement this morning.
T-Rise. I think it might actually be T-Rise.
No, it's RIZE is the ticker.
RIZE. Okay, RIZE. RIZE. That's the ticker.
Yeah.
Okay, plus 30% today. Just want to make sure that I'm looking at the right thing. And yes, it is. Okay, RIZE. So RIZE USDT, RIZE USD. So it looks like there is a pool on Aerodrome. Like you mentioned, there are two. Looks like there are two pools on one pool on Aerodrome. Rise USDT. You know what might be a good idea, Mike? Did you ever use XtraFi last fall?
I've heard you talk about it. I've never used it.
Okay, so XtraFi it basically allows you to lever up those full range, and they might have upgraded it to the V3 pools too, but I don't know. But definitely allows you to lever up Aerodrome full range liquidity pools.
Oh, okay.
So that might be something interesting with this thing moving like this if the volumes are super high. So
I would guess that the volumes would be pretty high. I mean, just with the volatility and the price this morning.
Yeah. See, that's when you want to be
with that Trump token.
Yes, that's what you want to do. So when there's massive volatility and massive volume, then if you got the balls, being an LP can make you a ton of money, man.
Well, and to be specific with the volume, you're meaning swap volume, right?
Yes.
Okay.
Yes.
Yeah.
Yep. So there needs to be a shit ton of swap volume in a particular pool. If that is true, then, I mean, you just basically define the number of hours that you want to be in that pool. The longer you stay in the position, the more risk you take. So if you say to yourself, hey, you know what? I want to be in this pool for 6 hours. And I'm targeting, a 3% return, which honestly is not unrealistic when the volumes are super crazy. So like crazy high. So I'm super curious now. I've got to take a look at aerodrome.finance, and I've got to take a look at the pool for that thing. So I go to liquidity on Aero.
You're looking that up. I'm on T-Rise's website, and again, fire blocks. We keep running across fire blocks. I'm still working on getting them to come on the show. We
Yeah,
got
see?
Aerodrome, Arrakis, Base, Canton Foundation, Chainlink. I wish Chainlink's tokenomics were better because man, that thing is just doing gangbusters as far as adoption.
Yeah, the tokenomics really suck though.
That's the problem. It's like, I mean, and not to say that I don't have a bag of Chainlink. I mean, it's being adopted so much and there's so much news. I'm holding it based off of just a pure
Oh my
spec.
God, bro. You can make some bread in this rise pool right now on Aerodrome. So here, yeah, let me share my screen. This looks really good. Check this out. So over here on Aerodrome, you see that this is the concentrated pool.
Can you zoom in a little bit?
Yeah,
Thank
there
you.
we go.
All right, perfect.
Let me. I think that's all the way in. So check this out, dude. This is this is what you want to see. This is like
shit.
this is so the reason why this is so good. Take a look at that TVL.
Yeah.
39,000 TVL, but doing 1 million in volume today.
Well, that means you're going to get a larger share of the
so exactly right. So if you go into this thing with fuck, man, even $3,000 or $4,000, you go into this with like 3 or 4,000, you're going to get 1/10 of the fees. So, I mean, you could do if it's doing a 600% fee APR.
That's now, like 200 or $300, off that $3,000. That'd be like what, $300?
Well, I mean, we're talking about so if the fee, so the thing with Aerodrome pools, and I haven't been an LP on Aerodrome in years, but this is something that I would touch. So if you take a look at 7,000% emission APR, I'm not quite sure exactly what that means compared to fee APR.
Well, remember, one of them is based off of if you take it in Arrow. One's based if you take it off the base assets. So,
but how does that make sense? I thought that if it was the base assets, that 10% that you lose 10%, but then if you stake, you don't lose that 10%.
I'm hoping that the new Aerodrome platform does this better. It's because one of them I think is like the emission APR is very like a lot more volatile. But Aerodrome has never done a really good job with their APRs. Like their percentages. They're terrible. I mean, I'll call a spade a spade. I love the platform, huge, I have a very large bag of Aerodrome. I'm very bullish on it, but their UI UX, I'm glad they're coming out with a new platform because it has not been my favorite to use.
So I'm pretty sure I actually know how this works. If we just back up real quick, and if I hop on over to Aerodrome,
Scotty D has a valid point. It could be boosted rewards from voting or something weird like that.
Yeah. So let's take a look at that. So if I go to vote, I'm looking for because that's actually a really nice looking opportunity right there. So Rise, there are no. So how is it that? Can you vote on V3 pools? Can you vote on V3 pools?
You should be able to.
Or is it just the V2 pools? I don't.
It should be all of them. Because basically what you're doing is you're voting on where the liquidity should go.
Right, but I don't know if you can vote on V3. Now it says migrating pools eligible for or in the process of migrating to MEV resistant gauges ahead of Arrow launch.
Okay, that's the new platform. And I'm hearing rumors, I mean it's in July, but I'm hearing rumors of the 2nd of July. That's all.
Yes. Yeah, no, I saw that too. I saw that July 2nd, maybe that's not the migration or the upgrade date, but that they were going to release a bunch more information on July 2nd, because by the 2nd of July, they would have their audits done. So that was what I was reading. But you see, here's the challenge with this pool right here. And I wonder if there's an automated liquidity manager for Base there is. It's fucking VFAT, VFAT.io. I haven't used this stuff in years, dude.
You can also use that autopilot if you go back.
There's an autopilot now on
see
on Aerodrome.
No, go up. go up. You see where it has like the 15, 10%? There you go.
See, I don't want. It's not so you can't do this for 71% APR.
No.
You can do this for 6,000% APR though.
Oh,
Honestly,
it's just
yeah,
that autopilot will manage it like VFAT does.
right. This mellow thing, this has always sucked. Like from the moment that they launched it, it was horrible.
Gotcha.
But so if we go back though, you see, take a look at this, plus or minus 4% wide. Let me just zoom in so you can see it. Plus or minus 4% wide, 1,700% APR. That's the emissions APR in Arrow. So the way that they're getting to that 6,000% APR that we saw advertised over here, this emissions APR, that the way that they get to that, Mike, is at 1 tick wide range. So if you're at 0.3% and you're 1 tick wide, then you can generate this emission APR, which is I think kind of misleading because okay, so you can generate this, that's 6,000% is 20% per day. So 7,000% or so is like 23% per day. So you can generate that, but your range has to be 1 tick wide, which is the most narrow you can make it. And so in order to keep it in range at 1 tick, you're going to be constantly rebalancing. So you probably shouldn't target this. And I don't think that the mellow integration in Aerodrome is necessarily the best way to do it, because my experience with that when they launched it and from clients that I've worked with has been nothing but horrible. But I think you might be able to do something over here on VFAT. So I haven't used this in a long time, but if we take a look at this,
looks like they've done a lot of work to it.
Yeah, dude. I mean, we interviewed, or I interviewed years ago in, I think, 2020 and 2022 or early 2023. I interviewed the dev, the main guy who was building this thing out, because this is an old platform. VFAT used to be it did not have this beautiful UI. It was basically
really
looked like.
Quick, before I forget, now that you mentioned an interview, a week from today, we're going to have Crux of Crypto on, and he mentioned I've been talking to him in DMs. Seems like a great guy, fellow veteran. He's says that he's willing to come on and explain the why he's bullish on Kita. So we've been catching a lot of heat. People saying that simply because we used AI for part of our deep dive, that somehow magically made it all incorrect or something. But then they'll turn around and use AI and to like a AI XBT posted, and they'll latch onto that as any bullish news. So anyway, I digress. But he's willing to come on, and he's going to point out why he's bullish on it and lay it out, and hopefully show us his cited sources and the actual data and the documentation and things like that that back up what it is that he's saying about it. So really excited for that.
Me too. I think it's going to be great. So I'm taking a look at this. I'm looking at this pool here, and just working to see if I can put together some type of position over here on VFAT that might make some sense. So if it's plus or minus 2% wide, then, and if we scroll down here, they used to show you on here like an estimated fee APR or reward APR. So I set up the automated rebalancing, which, oh, there it is. They're giving me a fee APR of 866%. So, I mean, on $2,000 daily rewards of $50, that, oh man, it's really close, but you've got to be comfortable with the risk that you're taking. So to do $50 a day on $2,000 is great, but the risk that you're taking is the volatility of rise.
That's what I was going to say, that like 2%, positive and negative. I mean, that's an awfully narrow range with the volatility in the price right now.
Well, yeah, but the reason to set a range like that is because of the volume. So
Oh, no, no,
when,
no, absolutely.
yeah,
It's just,
yeah.
keeping it, it staying in that range is going to be the problem.
Well, but check this out too. So the beauty of VFAT is
Mm.
that it tells you the in-range TVL. So the active TVL and
Yeah,
in-range TVL, these are different things.
yeah,
So active TVL, these are, LPs who have entered, deployed capital into the pool, but they're not in range. They're
exactly.
sitting out of
Yeah,
range. So
so
that's
they're not
the
earning their portion of the fees.
right. So check this out. If the total TVL for this pool is 36K, the active TVL is 31K, but the in-range
Yeah,
TVL is
see a couple
300.
grand.
No, the in-range TVL is $300.
Yeah, that's what I mean. Okay,
So if the in-range TVL is $300, that means if you go in with,
yeah,
$3,000, you are
you're
suddenly
getting like
the
90% of the
you're
freaking
getting,
fee.
yeah, yeah,
Yeah,
yeah, like 90+% of the fees. So like this fee APR of 866%, that might actually be super low compared to what you would actually be able
yeah.
to earn. Um, I like this. I like this. Now, I want to know a little bit more about Rise, RIZE. Now, if I take a look at the token, you know, um, so I'm seeing, Mike. I put together that watch list of 500, the top 500 crypto pair or assets, and I've been seeing more and more patterns like this, where these coins that look like they were dead, maybe were not dead. you know, so like this rise thing, this is exactly what I'm talking about for like what I want on a shopping list for a moon bag. I want stuff like this, rise, RIZE. If we take a look over on coin market cap, we're talking about an FDV of $34 million. Now, tokenomics can't be all that good. Well, maybe they could be, but 5 billion total supply, only 2 billion circulating, so quite a bit more left to unlock. But with all this volume, like that's what you want to see as an LP. You want to see the volume, and it looks like all that volume is on Aerodrome, like all of it.
Yeah.
So if you're going to be an LP, you got to be on Aerodrome.
Well,
Um,
like I said, I mean that T Rise was launched on base, and so for the most part, that's where all the liquidity is going to be, which is a good thing because I mean that contributes to like a highly focused where people have to go to swap. It's not spread out across multiple chains and multiple protocols, and it concentrates where you can earn those fees.
Yeah. That was one thing that a lot of a lot of project creators did, in the past bull, is when they would create a new piece of software, a new DApp, launch a token for it, they would, I think, mistakenly think that it was a great idea to have liquidity on all sorts of different chains for it, when really, like, you only need liquidity on the one chain, and that's the winning chain.
Yeah.
Whatever chain that is. I think it's
Honestly,
base.
it's looking like two of the top ones I'm keeping an eye on is ETH and Base.
Yeah, mainnet base.
Yeah.
I like Arbitrum. I hope Plasma survives and does well. I think Plasma is pretty cool. I really like Canton. Haven't been able to use it natively yet. I can't wait to be able to do that. So yeah, man. Like when it comes to like winning chains, of course I like Hyperliquid and the Hyper EVM chain. Um, Very, very few winning chains, but yeah, this pool over on Aerodrome looks like an interesting opportunity. I'm going to track this thing, and I might go in with $300 just to see if my thesis is correct. Because looking over here on VFAT, if my thesis is correct that the in-range TVL is literally 1% of the active TVL, then that means if I go in with $300, I should be able to get half of the fees that are generated.
Well, I mean,
Um,
I'm willing to do it if you are. I'll put I got a couple $100 that I can pull up VFAT and do it live.
oh yeah, here I could do it right now. Well, I gotta fucking unplug my mic to be able to do that though,
Oh, no
because
worries.
I can't connect my wallet and have my mic on at the same time. But this looks good though, bro. This does look good. Um,
Well, maybe well, like give us the setup. So you're thinking, plus or minus 2% is what you're thinking?
I mean, I'm thinking super narrow because of the volume. So, and I would turn on the auto rebalance. The only way this works is if the volume remains where it is. That's the only way this works. This type of setup is going to fail unless the volume remains super high. So, if the volume remains where it is now, then this is a winner. And
Right.
basically, all you would do is, you would set a certain amount of hours, a certain number of hours that you plan to stay in the position for,
Maybe
and you would.
maybe like 24 hours or something.
I think that's too long.
Oh,
I
dude.
would do, I would do something like 4 hours or 6 hours, something like that.
Okay.
Because the way that the maths for these LPs is that the longer that you stay in the pool, in the position, the
Yeah.
more risk you take, not the less. So, kind of interesting about that. But yeah, so I would probably just like go in really small to test the thesis. And then, if after the first hour or two, the thesis is proven out, well, then maybe increase the position size.
Well,
But this looks, yeah.
I kind of figure that even with a narrow range, I mean, if it goes out of the top part of the range, this is what a stable. It's USDC, so I'd end up with more USDC plus the fees if it goes out the bottom, and I end up with a little bag of Rise. And I'm
Yeah, but that's so the way to look at it is, you got to think of it in terms of your gamma
oh no,
because
I understand that like the dollar value would be less, but if I'm looking to start a little bag of Rise long term,
but that doesn't work either because if you're trying to create a bag of Rise long
yeah.
term, you're better off just taking your stables and buying
Oh,
Rise
no,
rather than
absolutely.
entering the LP.
I'm just saying, I'm entering a position. I have a chance to earn a bunch of fees. If it just gets away from me and it goes out the top, I end up with more USDC than I initially put in, potentially with the fees and everything. And if it goes out the bottom, it's not like I lose all of my liquidity. I just end up with a bag of Rise. So it's not a matter of which is better, just buying a bag of Rise or trying to build a bag of Rise using a liquidity pool. It's just worst case scenario, I end up with a small bag of Rise, or I make a little bit of money.
So you know what you could do, Mike, is and this is actually not a bad idea, dude. You know what I could do? That app that I've been building,
Yeah,
Runway.
yeah.
So I've been building that out to be a directional and spread trader, but I could build it out to be an automated liquidity manager for liquidity provision. And I would probably, honestly, bro, I'd probably focus on Aerodrome and Uniswap. But I need to figure out what the APIs look like for those two.
Well,
So
I mean, using that X402 and and a lot of the stuff, a lot of the different applications that are already built out on it, I would think that it would be pretty easy because I mean they've been doing a really good job with these AI assistants and agents and stuff like that. And then of course that X402 is what unlocks it all.
so for building what I described a second ago, taking this is the Runway app that I've been building.
Yeah, yeah.
This is the trading desk here. So this is I'm just getting this thing tested out and leverage ranking. Oh, did it actually enter a position? Because I've got it working right now. It did. It did. Oh my god! So this thing is so fucking cool, dude. So it doesn't really work the way I want it to yet, but I've taken it from zero to now it's in an automated way entering positions for me, which is super super cool. So it's I gave it $1,000 on testnet. I'm paper trading this on Hyperliquid, but so I'm going to let this thing run for like the next couple of weeks, it needs to get a bunch of trades under its belt, because right now during the testing phase, its win rate is 31%. And what that means is, like, the trades that it's entered, it's been in for a couple of seconds and immediately closed because I've been building the software. So this win rate is artificially low. And what that does is it skews the expected value calculation to the downside. And that tells the risk manager, don't enter anything. So I had to like turn that off a little bit so that it would actually start entering trades so that it can learn. You know, it's got a leer. Take a look at that Sharpe ratio though, bro. Fucking 6. That's crazy. So that's really good. So basically what I would do is, this is the directional and spread trader. And you can take a look at the spreads down here. So this is the spread trader, and this is just on testnet, Hyperliquid testnet. So the pair universe is only 3. So it's like Bitcoin E.
We've gotten off the rails a bit when it comes to the news. I definitely
oh yeah, no, 100%. But you see this stuff on VFAT. I'm pretty sure that VFAT's like code base might even be public. You know, like I'm pretty sure that like what they built is just in a GitHub repo. So like I could just literally clone that repo and then build the ALM into Runway.
Yeah.
You know?
No, that would be awesome, dude. I mean, fucking, I would love to have something like that, because, you know, people like me that, you know, understand the basics, but, you know, would like something that can analyze, you know, all the different data points and, you know, structure something so that, you know, it maximizes your chances of profitability. That would be huge.
Check this out, bro. Just it comes up with trade ideas for you too. I love it.
Yeah. All right. Let's see. All right. So yeah, T-Rise, it looks like what can be tokenized? Digital bonds, ETF, funds, real estate, commodities. So yeah, it's basically a tokenization play. You know, kind of like Ondo and things like that. So I would be interested to see what the tokenomics look like, to see if it has that value capture that we like to see. Because I mean, I'm very, very bullish on tokenization. I'm just not bullish on the tokenomics of Ondo. Very bullish on what, you know, Ondo Finance is accomplishing, but again, you know, I'm not bullish on, you know, the fact that Ondo is simply a governance token and has absolutely no connection to that profitability or success. So I would
that's always a problem.
Yeah, I would definitely like to. So maybe tomorrow one of them will be T-Rise.
Oh yeah, 100%. And like on the Ondo topic, like, dude, just because it's a governance token right now does not mean that at some point in the future it won't become something that's not just a governance token, you know?
Anything's possible, you know? It's just, but you know, you have to understand the current state of things if you're going to invest in it, because that's what you're investing in. You know,
true.
Now above and beyond that, you can speculate. You know, there's been rumors, and you know, we've had a couple of people from, you know, that are Ondo bulls, you know, say that they've mentioned that they're going to do a vote later on this year and potentially, you know, make it more of a utility token, and that's great. You know, if you want to build a small bag based off that speculation, and as long as you understand, as long as you understand that, you know, it's purely speculative, and you know, there's a little bit of hopium in there, no problem. You know, that's all we're trying to do here, is just educate you on the tokenomics, the value capture, you know, the current state of things, and then what you do is up to you. That's, you know, we're not trying to tell you to invest in something or not invest in something. We're just here to educate you on, you know, the tokenomics, on the projects and what they're doing. That's it. All right.
So Mike, this so the newsletter here looks like these data are stale from 4 days ago.
What's that?
You see there that these data on the newsletter here.
Yeah.
It looks like, so the skim, all of the articles, maybe if you regenerate this, it might work, but I think that the newsletter generation is it's chimping out.
Well, it says it's from June 22nd.
Okay, let's see. Is it?
I mean,
I hope so. I hope so. Let's see. Let's see.
Right. So
because it's
Bitcoin to 5.
No, it's not. It's been it's the same.
All
It's
right.
publishing the same. So the numbers are updating, but the generation isn't. I think that the Vertex API key that I gave it,
All right.
it might be messing up there. I
Well,
gotta fix that this week.
let's get into some headlines. I'm just going to kind of go through some headlines and get your input. So we got 30 plus DeFi protocols shut down in the past 6 months.
Yeah.
Gold, Step Finance, Polynomial, Code 4 Arena, Zero Lend, all dead. Not exploits, not rugs, just ran out of money. The lending market dropped 42.3% year to date from 35.3 billion to 20.4 billion. That liquidity doesn't disappear, it concentrates. Meteora, sitting at 75 million market cap on 18 million annualized revenue with 40 million in treasury and 14 million in completed buybacks, funded by fees, sub 4x PS on a protocol that can run 2+ years at zero growth while competitors are going dark every week. The sorting is a gift if you're paying attention. So it's saying that Meteora might be something to look at. I mean, should we make T-Rise and Meteora our deep dives for the
Love
moment?
it. Love it, dude. So, Meteora, why don't we save Meteora for Wednesday?
Okay.
And then so tomorrow, because we're going to go through SanDisk today,
Yeah.
I want to take a look at Micron also, because
All
we really need to learn more about the state of these DRAM producers, these memory producers.
Well, and we want to get into stocks too. I mean, we've been focusing on crypto and stuff like that, but we do invest in stocks, traditional.
And these things kind of go hand in hand too. Like the whole AI trade and crypto, they're really interlinked.
Yeah.
So like we've really got to figure out what's going on with the state of memory, because dude, like those memory producers are just going crazy parabolic. So Scotty D's saying, for the website, create an issues function where people submit problems, set up an agent to review issues. Which, 100% yes. But which website?
I think it's like a Node.pro, setting up something like a bug hunt, to where if people are using our apps or using the website and they run across issues.
Yeah, that's a good idea.
Yeah, they could submit a ticket.
I could totally do that. So one thing that I've been working on, I just started working on it over the last couple of days here, Mike, is local AI and using basically creating a second brain. So check this out. This is super cool.
Well, we can probably just put it in Hermes, have it to where they can talk to Hermes and let Hermes know he can possibly work on it, and if not, then if it can't fix it, then it reports it to you.
Yes, yeah. So it would, yeah. But so Goldfinch, you were talking about 30 protocols, shutting down over the last, however many, year to date, something like that.
6 months,
dude. People got screwed on Goldfinch.
Yeah.
It's a real cautionary tale when it comes to like the RWA sector of DeFi. Maybe it has some noble intentions, but there's serious risk when it comes to this off-chain credit risk. It was, people were talking about it as if it was like DeFi private credit. It was backed by, A16Z and Coinbase Ventures. And so that tells you that, even these big companies can make mistakes with who they invest in. Mm-hmm. And Goldfinch, it's basically gone to zero. Its token is down 99.8%. And, there are defaults on like all of its pools. So the vision was under collateralized lending, but there were structural flaws like inadequate credit vetting. Like, dude, if you're going to underwrite, borrowers, well, then, you better do a good job. And they didn't do a good job. And I saw one guy on X yesterday, man, 50 million in losses.
Yeah.
And, you talk about getting wrecked, man, like REKT, bro.
Well,
So
and it's important that people understand, how early we are on this tech and these, these protocols and things like that. Don't put too many eggs in one basket. No matter how bullish you are on a protocol or something, or how juicy the yield is or the position, do not go too deep on any one of these, because all it takes is an exploit or it to go down or a rug. I mean, it's just there's way too much risk right now. So or if you do, make sure you understand those risks. So a little bit of render news. So, a render network burning 2.3x more tokens from fees than it emits in new supply. 38 million revenue in January. First DPIN project to issue annual guidance at 180 million. 500,000.
wow, really? They're
Yeah,
issuing forward guidance?
yeah.
Wow,
500,000
see,
plus
that's cool.
frames. Well, hold on one sec. 500,000 plus frames rendered daily for production studios paying cash, not farming tokens. The emission to revenue crossover is the single most important metric in DPIN, and Render crossed it months ago. When token supply is shrinking from actual business revenue, you stop pricing it as a speculative asset and start pricing it on cash flows. I want to
Right.
point out this is what we're talking about value capture. This is people are waking up to this. If there is a direct correlation between the token price and you the token holder and the revenue being generated and the success and use of the protocol or the chain, that is value capture. Render has that. So, David, you had something to say.
Oh, dude, so Render is Solana. They migrated to Solana,
Mm-hmm.
and it's decentralized GPU compute, and this one is definitely into my moon bag here. So I'm just going to add this one into my moon bag watch list. Now, the forward guidance. You see, that's the thing, man. If they can guide forward what they expect their revenues to be, then that's a huge deal. So this concept of forward guidance, as it relates, like in the context of render, this
Yeah.
is a term that's traditionally used by businesses or central banks to signal maybe future economic policy or future cash flows.
Yeah.
And so it became a big topic in Render's governance system. And so there's a vote, RNP 020. That was apparently a highly debated community vote in the Render network. It changed how Render communicates and manages incentives for the people that are keeping the infrastructure alive. I'm assuming the validators, the node operators. So the pitch here is interesting. Seems like the forward guidance may have caused a rift within the community, and unfortunately, it looks like the community officially defeated the RNP 020 proposal. And yeah, they decided to adhere to algorithmic token mechanics instead of guaranteed central bank style revenue targets for operators. So Render seems like it does issue quote unquote guidance today, even though that forward guidance policy was rejected. So see, here's the thing. I'm assuming, Mike, that you were reading from AIXBT, right?
Yes.
Something like that. Yeah. So AIXBT is a bot.
Yeah.
And because it's a bot, that means that it's only as good as the input it's fed.
Oh, absolutely.
So like, this is not your fault at all. This is just something that we all need to be aware of.
Well,
is that whenever
that's why I bounce it off of you, and then you go deeper on it.
Yeah, exactly. So garbage in, garbage out.
Yeah.
So if there's inaccurate data that AIXBT it feeds or ingests, then it's going to give you a crappy output. Exactly. And so it made it sound from that little post that it did that the forward guidance was approved.
Well, and that's what I wanted to point out, because a lot of people, like I said, a lot of people from KTA posted that post the other day and took it as bullish news. And so I want to point out that you can't take these things at face value, and that's
Right.
why whenever I use this, David is pulling it in the background to to fact check it, to find
Yeah.
articles and find things and fact check it. So
It's always verify, don't trust.
well, and that's why on our deep dives, that's why a lot of times I go through when I do these deep dives, using the AI, is I go through and I verify as much of it as possible. And again, we're not going to get it all right, but
Right.
I manually verify a lot of the information, in our deep dives, just for that reason, because we are using AI. It's a very powerful tool, but you have to understand the limitations of it.
Agreed. So it does hallucinate and it does lie. And sometimes I think it actively chooses to lie, if that makes any sense. And so, I've had conversations with people, Mike, where they will disagree with something that I say, and then they'll go over to Gemini or go over to ChatGPT or whatever their favorite, model provider is, and they'll type something in and then get an output. And then they'll be like, see, look, the AI says you're wrong. And it's like, well, no, actually, the AI is incorrect. It's lying to you. It's either incorrect or lying, or maybe both. So, there is still a place for human domain skill and human domain expertise.
Exactly, and that is the crux. That's the important thing to understand is, yes, AI is a powerful tool, but it only gets you so far. It can save you a lot of time, but you still have to put in some skin in the game. You still have to get in there and you have to dig around, and you have to verify what it is that that it gives you. You can't just take it for face value and be like, so let it be written, so let it be done.
Right.
So,
It's very true.
yeah. So a little bit of Coinbase and Arrow news. So Coinbase Ventures, there's rumors they just did the largest ever, and David was talking to me about this the other day. On-chain token purchase, buying Arrow on the open market like every other participant, then locked all of it as VE Arrow. So supposedly $20 million plus at 3.9x annual revenue. Uniswap trades at 61.9x. Aerodrome does 134 million a year in fees. Distributes 100% to lockers. Controls 47% or more. I've seen it more of base TVL. Arrow merger with Velodrome is potentially going live July 2nd. It is going live in July as of right now. Deploying to Ethereum mainnet, which it is. Coinbase is buying governance control over its own L2's liquidity monopoly without paying a control premium. Think about why they are still buying more. So, I mean, it shows a definite, if this checks out, it shows a definite commitment of Coinbase for the new Aerodrome protocol that's coming. So, I mean,
the problem here, Mike, and again, this is, I've read the same post, AIXBT, great post. Unfortunately, I'm unable to verify whether Coinbase Ventures executed another market purchase recently.
That's why I added the if true and could be
right.
We need to understand that this isn't.
So I do know that in 2024,
I have seen some people that pulled some on-chain data. I have not verified that on-chain data, however.
So I know for a fact that in 2024, Coinbase Ventures executed a $20 million dollar open market purchase.
They already have a large amount of liquidity in VE Arrow locks. I just the new a new one. I haven't fully verified it. I have looked at some on-chain data that does point in that direction. However, I still have some work to do to 100% verify it.
Yeah, so we could potentially do that, and the way that we would do that without relying on someone on X posting a screenshot and saying, "Trust me, bro."
Yeah, no. Screenshots can be faked. You need to go to actual on-chain data.
Right, and we could do that.
Yeah.
I bet you Arkham has doxed Coinbase Ventures
Oh,
wallets.
100%. 100%.
Yeah, I bet you.
I mean, do you want to take a look and see if you can find that?
That's what I'm doing right now.
Oh, perfect.
Yeah.
All right. So we used a little bit of AI XBT. Let's go to the actual news now. All right. So it looks like Roundtable, ticker RTB, has launched on-chain USDC payment infrastructure for professional publishers supported by Coinbase. This addresses the antiquated settlement cycles of traditional media by allowing publishers to receive ad revenue in real time. It's a tangible example of DeFi rails solving a specific pain point in the legacy media business model. So let's take a look at this article and see. All right. So Roundtable Digital has launched a real time payment infrastructure allowing professional publishers to receive their ad revenue instantly in USDC via Coinbase, addressing the outdated ad settlement cycles in the media industry. Damn it. Nearly 200 publishers can immediately access earned revenue thanks to Roundtable's media liquidity pool and smart wallet network that
That's
tracks,
super cool.
yeah,
Yeah.
that tracks and settles transactions on chain, significantly reducing traditional payment delays. Coinciding with this, Coinbase provides the necessary crypto wallet support for these transactions. Roundtable aims to monetize media ad sales with a comprehensive AI DeFi powered platform designed to enhance syndication, which is powerful, monetization, and data security within the professional media sector, while also restoring economic equity and control over intellectual property for creators. This is huge because, like, say that the information that we put out, the media that we put out, if somebody clips our content or something like that, potentially this could make it to where we get because of its intellectual property, we
Right.
get revenue.
Royalties.
Yeah,
Yeah. Where are my royalties at, bro?
yeah. So I mean, this is bullish, for people that make content, and potentially it could even be for music. It could be for art. It could be for a lot of different things.
I think this is great, Mike. So the way that Amazon does it, I published 5 books on Amazon,
Yeah.
and I get royalties, I think, like every month or every quarter or something. But if I just publish it, I don't know where I would publish it. So like, how do I benefit from this? I would have to publish using this protocol, or let's use the example of that music generator that I built.
Yeah.
If I wire that up, such that to use it, you've got to, deposit USDC or something like that. You got to pay to generate your albums.
Yeah.
Then how could we wire that into this? What's the name of this platform again? What's this one called?
Roundtable.
Roundtable.
Yeah.
So how do we use Roundtable? Is there a website for this thing?
Let's see.
Because that's something that we could like test right now. I'd be super open to doing that.
Were you able to find anything on Arkham while I looked this up?
Yes, and it looks like I don't. So I was able to find information about Coinbase Ventures, Coinbase Prime, their proxy. It's something called Definitive, and it does not look like, from the little bit of information that I've gotten so far, it does not look like they executed another buy.
Right.
It looks like the AI XBT bot may have been referencing their initial doxed buy of $20 million of Arrow tokens, but I can't confirm or deny whether they've executed another market buy or not.
I'm not. So I went to their website, rtb.io, And it just has about team, press, platform, partners. Oh, here, I'll share it. To share screen. So it has about team, press, platform, partners. Let's try platform. Browse platform. Not seeing where potentially you could use it. Find your passion. There you go. Crypto. Featured stories. We might have to look more into this. It doesn't look like, just based off their website, that there's a way to actually onboard.
Maybe this is like what they are building right now or proposing to build.
Possibly, but let's go ahead and move on. We got about 4 minutes. So market pulse, prediction markets and speculation. Poly market activity shows a surge in the probability of Bitcoin breaking 64K today, jumping from 63% to 83% in under an hour. Market participants are closely watching the prediction markets as a gauge for short-term sentiment, particularly while Bitcoin remains in its 64K consolidation range. Let's see.
Yeah, this is, look, it's still a Bitcoin bear market. And with SpaceX down 10% today, that's erasing $250 billion in market cap just today.
Yeah.
SpaceX, since its IPO, has pumped and dumped, which, I would be willing to bet it's probably similar to what Tesla did immediately after its own IPO. Mm-hmm. I think that SpaceX is going to be one of the most valuable companies ever, over the next 5-10 years. But, is it overvalued at IPO? Probably. If we take a look at something like the NASDAQ, unable to put in a fresh all-time high today, that just kind of makes me think that, it's a Bitcoin bear market still. And the moment that stocks decide that they want to correct a little bit, that'll be the next leg down for Bitcoin. In fact, Bitcoin could be the leading indicator, because I've seen some charts, Mike, that tell me that, net liquidity is actually contracting. So if liquidity conditions globally are actually getting tighter, not looser, then Bitcoin tends to be a leading indicator of that. So if we get, the next leg down out of Bitcoin, this bear market, I think that, from everything that I'm seeing, it looks like we're getting very close to the end of the Bitcoin bear. And if we've got one more leg down, I kind of think that, 49K is the low. Like that's the low, the trough. So, if you think that 50K is going to be the trough, well, then how far away are we from that? We're probably like, what, 20-25% away from that. So could it make sense to start thinking about picking up some Bitcoin here? I think so, or if you want to be a little bit more patient, you wait until October. That's when the prophecy says the bear should be over. So,
and that's what I'm waiting for. Yeah, I'm waiting another month or 2 or 3 before I deploy the little bit of dry powder that I got. I have some good bags of some good projects, and so I'm not chomping at the bit too hard. If I get into anything, I want it to be I want it to be at a fire sale. I want it to be at a discount.
Agreed. 100%.
Well, let's kick it over to the deep dives, and I'm going to cut out just for a few minutes. I just got to make a quick call, but I'm going to kick it over to you on the deep dives.
Sweet. All right. So we're going to start off here with SanDisk. So SanDisk, I just want to begin by taking a look at the chart of SNDK, SanDisk. This is basically, if you had bought like 50 grand of SanDisk a year ago, you'd have $3.5 million right now. It's like, this is crazy. Why can't Bitcoin do this? What the fuck? So this is SanDisk right here. And went from like a $50 billion market cap corporation to $1 trillion in like a year and a half, I think. So we need to understand why it did this. Another thing that's pretty cool here is that you can trade this over here on SNDK. You can trade this on Hyperliquid. This is a liquid market, plenty of volume over here, plenty of open interest. You can totally trade this thing on Hyperliquid. So this is a permissionless way to be able to trade SNDK. All right, now let's go ahead and learn a little bit about SanDisk. I'm going to go ahead and play this content. And if you can't hear this, please just let me know in the chat. So I'm going to go ahead and hit play.
I'll let you know. I'm listening, David.
Oh, gotcha. Here we go. Hit play. Press play.
This chart shows SanDisk's gross margin waterfall across fiscal year 2026. In the first quarter, the company posted a stable 29.8% margin. By the third quarter, that number surged to 78.4%, an anomaly for a hardware manufacturer operating in a notoriously volatile commodity sector. Look closely at how that margin translates into liquidity. Over that same period, SanDisk generated $2.95 billion in adjusted free cash flow in a single quarter. That jump drove a complete reversal in profitability. SanDisk went from losing money in early 2025 to posting $23.41 in non-GAAP diluted earnings per share. To understand how a commodity hardware manufacturer achieves software-level profitability, we have to trace its origins. In February 2025, Western Digital executed a structural separation, dividing its storage conglomerate into two distinct entities. The logic was strictly financial. Combining stable, slow-growth hard disk drives with the highly volatile, capital-intensive flash memory business created a persistent conglomerate discount that suppressed the valuation of both divisions. The separation was structured as a pro rata, tax-free distribution, giving existing stockholders fractional shares of the newly formed SanDisk Corporation and establishing it as an independent entity. For 9 years prior, SanDisk operated as a heavily integrated business unit inside this facility, the Western Digital headquarters. To untangle the consumer-facing overlap and eliminate legacy labels, the newly independent corporation staged a massive rebranding initiative here at the 2026 Consumer Electronics Show, consolidating product lines under the SanDisk Optimus name. The split removed the capital constraints of the HDD business, allowing SanDisk to pivot its infrastructure toward the specific physical bottlenecks of global computing. This segmented bar chart isolates where that specific demand is coming from. While the edge and consumer business lines show steady performance, the data center segment explodes, expanding 233% sequentially to reach $1.46 billion in a single quarter. That surge is the direct result of hyperscale cloud builders transitioning from initial GPU training phases to deploying massive real-time AI inference models. This equation represents the quantitative throughput model used by system architects to evaluate the read bandwidth required for high-performance inference clusters. The first variable accounts for the sheer size of the active parameters within modern large language models. That baseline is multiplied by the target token generation rate per user and scaled again by the number of active graphic processing units distributing the computational load. When traditional mechanical hard drives attempt to push data at these speeds, their physical latency constraints create a hard ceiling well below the required bandwidth. The moment a storage tier fails to meet that threshold, multi-million-dollar compute clusters sit completely idle, waiting for data. To break that bottleneck, data centers are forced to rip out legacy arrays and deploy ultra-dense, quad-level cell enterprise solid-state drives, like SanDisk's Stargate platform.
Okay, so just real quick about this Stargate platform and about SanDisk. I've read that they've got like a 3-year-long backlog of orders. So, here's the problem though, Mike. Like, I was 10 years old in 2000, okay? Yeah. I wasn't trading at 10.
Yeah.
So, like, the reason I'm mentioning that is I don't have the 5 decades of experience required to, have traded through the multiple semiconductor, rallies and bubbles. There have been multiple semiconductor bubbles over the last several decades. This is not the first. So, and my understanding is that in each of them, there have been, backlogs like this.
Well,
if these,
and you were saying something to me the other day about kind of like potentially that a lot of these backlogs, these purchase orders can be not falsified, but like what's the word I'm looking for? I know you know what I'm talking about. Where it's they'll other companies, other tech companies will put in an order and basically like they'll borrow money, this incestuous freaking round robin.
The circular financing. Yeah, so that's one piece of it, the circular financing part of it. But also, I remember reading that in the 2000 crash, when people when things really started to correct, a lot of those orders were like duplicates, and the orders just got canceled. So, like, just because there's all this this backlog of orders, and the stock has is up like what 100x in the last year, it doesn't mean that like this can't come crashing back down to earth. Like, if there is, and there is massive demand, like, here's the thing though, Mike, like, there is massive demand for this memory because you can't run these models without it. So like the big bottleneck that I'm running into running this stuff locally is that I've got 24 gigs of RAM on my machine. Now, SanDisk makes this RAM, Samsung makes this RAM, Micron makes this RAM. So if I've got 24 gigs on my machine, but I need 512 gigs to be able to run the model that I want to run, a 512 gig machine, an Apple machine, there's only one of them, the M3 Ultra, which is from a couple of years ago. There was a spec that had up to 512 gigs. That machine is like a $20,000 machine now, and it's like 3 years old. So like there's massive demand for this RAM. So Ray, we can, I can most likely help you to resolve that problem. So yeah, I'm pretty sure, Ray, that I can help you do that.
Hey Ray, if you haven't already, jump in our Discord. Sign up for our Discord. Go to the Node.pro and you can find a link to.
It's in community. Yeah, it's right there in the community tab.
And then you'll be able to talk directly with me or David. And, David sounds like he'll be able to help you. Get a hold of those tokens.
Yeah. So just hop into the Discord. But let me keep playing this.
Yeah.
These are the physical accelerated compute boards dictating those massive data requirements. Because enterprise SSDs are now mandatory for functional AI inference, SanDisk commands immense pricing power over the world's largest cloud providers.
So did you hear what it just said? It said that this is mandatory for these cloud providers. Sure. So this data, or not this data, this DRAM, this RAM is mandatory. You can't operate this stuff, the inference, that's the compute. You can't operate it without the RAM. That's why Micron, Samsung, SanDisk, these RAM manufacturers, their stocks have gone parabolic because everyone needs this stuff. Otherwise, you can't run the AI.
Commanding high prices today does not solve the core weakness of the flash memory sector. Historically, it is heavily exposed to spot market commodity volatility. To insulate their earnings, Chief Financial Officer Luis Felipe Visoso pioneered a structure known as New Business Model, or NBM, agreements. Instead of negotiating transactional daily sales, SanDisk locked elite hyperscalers into multi-year supply contracts representing $42 billion in backlog, supported by over $11 billion in firm financial commitments. This flowchart details the mechanics. Hyperscaler demand is locked into a sophisticated floor and ceiling mechanism that fixes near-term pricing while allowing for calculated variable formulas in subsequent years. To eliminate counterparty risk, the contracts contain a strict default trigger. If a client fails to perform, guaranteed capital automatically transfers to SanDisk through third-party banks, entirely bypassing legal arbitration. Securing firm sales.
You see that backlog? See, this is what people are so excited about. If we just take a look at this real quick, let me just
automatically transfers to SanDisk through
it's right
third-party
down
banks.
there on the bottom. You see that? $42 billion total backlog, 11 billion firm commitments. Now, you got to ask yourself, this is SanDisk. SanDisk is now $1 trillion company, okay, market cap. Does $42 billion in a total backlog over 3 years, over the next 3 years, does that translate into a $1 trillion company valuation? Or is that irrational exuberance likely to correct? I think it's probably the latter. Also, this is a wake-up call for China because they've been behind in the chip race. So what happens when all of a sudden you've got Chinese RAM that they're going to subsidize? The CCP is going to subsidize the hell out of that product, and then they're just going to dump it on the market. What's going to happen to SanDisk and Micron and Samsung when the Chinese do that? And they're going to. They're going to.
Entirely bypassing legal arbitration. Securing firm sales contracts only secures the demand side of the ledger. SanDisk still needed to guarantee it could actually manufacture those drives. In January 2026, SanDisk executed a contract extension with Japan's Kioxia Corporation, locking in their Flash Ventures shared capital framework through 2034. Under the revised terms, SanDisk agreed to pay Kioxia a separate $1.16 billion cash manufacturing service fee, specifically to guarantee preferential access to future production lines. Fulfilling that backlog requires massive physical scale, processing over 50 terabytes of telemetry data daily at automated manufacturing bases just like this one in Japan. By legally binding downstream hyperscaler cache and paying to lock up upstream Japanese fabrication capacity, SanDisk effectively walled off its 78% margin from the commodity cycle. The final barrier to—
No, it didn't. So maybe for a little while, but the moment that there's a Chinese competitor that can undercut the price, then, SanDisk has a problem. But that's not today. When will that happen? That's the question.
To total independence existed on the balance sheet. Following the spin-off, Western Digital still retained a substantial equity stake in SanDisk. In February 2026, SanDisk announced the pricing of a secondary public offering, taking 5.8 million shares owned by Western Digital to market at $545 apiece. This transaction map outlines how they executed a $3.17 billion transfer without crashing the stock price. They utilized a complex debt-for-equity exchange. First, Western Digital transferred the shares directly to affiliates of JP Morgan and BofA Securities to retire a corresponding block of its own outstanding bank debt. Next, those financial institutions acted as underwriters, distributing the shares straight into the hands of institutional buyers. Because the offering consisted entirely of secondary shares, SanDisk received zero direct proceeds, but it cleared Western Digital's position without diluting existing public shareholders.
Brilliant.
Paired with the immense cash flow generated from the data center segment, SanDisk rapidly paid off $3.5 billion in credit facilities to achieve a zero-debt balance sheet. That capital realignment cleared the final hurdle for SanDisk's addition to the prestigious NASDAQ 100 index in April 2026. Replacing Atlassian on the index triggered an immediate wave of programmatic buying from passive index tracking funds. In under 14 months, the multi-stage divestment replaced Western Digital's legacy ownership with index-backed institutional capital and a debt-free balance sheet. Yet, the physics of computation dictate that the AI memory wall will eventually overwhelm even advanced enterprise solid-state drives. To prepare for that physical limit, SanDisk initiated a global standardization program under the Open Compute Project to engineer high-bandwidth flash, or HBF. They partnered directly with SK Hynix to establish the physical semiconductor footprint required for future mass fabrication, utilizing advanced facilities like this one. This hybrid H3 architecture illustrates high-bandwidth memory acting as a low-latency cache, while high-bandwidth flash stores the AI model adjacent to the processor, providing 8 to 16 times more parameters at identical manufacturing costs. HBF demonstrates an up to 20% performance per watt improvement. By standardizing HBF, SanDisk integrated its memory architecture into the core logic of next-generation AI processing clusters. This chart traps SanDisk's share price trajectory from its $40 initial public offering to its peak in June 2026, driving total market capitalization to $323 billion. That intense institutional confidence pushed the stock to a premium trailing price to earnings ratio of 75.95. At that multiple, the stock is effectively priced to perfection. There
Yeah,
is absolutely no margin for execution errors or delays. A
right.
macroeconomic slowdown that cools hyperscale capital expenditure budgets would immediately pressure future contract renewals.
Is that would be a huge problem for all these memory producers because the big challenge right now is that to run these models, you need a ton of RAM. So, like, let's say that I want to run one of these frontier models locally. I would need, half a terabyte or a terabyte or 1.5 terabytes of RAM. And it needs to be that super low latency RAM. And that's what these guys manufacture. Micron, SanDisk, Samsung, SK Hynix, those companies all manufacture this stuff. Massive demand for it, right? What happens when, a frontier lab, maybe something like ZPU, when they come out with a model that will run on 8 gigs of RAM and it's a frontier model, what happens then? All of a sudden, you don't need this RAM anymore. So, and that's likely going to happen eventually, So, as of right now, to run the frontier models, you need a terabyte of RAM. But in potentially the not too distant future, you might need significantly less. So, yeah, something worth watching there.
Furthermore, the company's optimistic margin projections assume a flawless production ramp of the high-density by 6 architecture, making any unexpected wafer-level defects a critical threat. And semiconductor manufacturing requires extreme physical precision, meaning any unexpected wafer-level defects or yield delays make operational execution uniquely fragile. Because SanDisk relies entirely on Kyosha's front-end fabs, its supply chain is heavily concentrated in East Asia, exposing it to regional trade disputes. SanDisk used multi-year contracts and targeted capacity investments to mathematically solve the inference bottleneck and lock in a 78% gross margin. But its stratospheric valuation relies on one extremely fragile assumption, that absolutely nothing will ever break in the physical world.
I mean, how many times have we seen this shit? So this same exact thing happened in 2000. And I think that what we really need to do, Mike, is perform like super legit deep dive research on, the 2000 event, the so-called .com bubble, so that we can accurately compare it to what's happening today. And then I want to go back in time further, because my understanding is that there have been multiple bubbles in semiconductors, and that when you get a semiconductor bubble, that in the past, I think since 1960, has always marked a market top. But there's got to be a difference now. Like, dude, these AI tools are just like unlike anything else that has ever been created in human history, I think. So when people say it's different this time, I always think, maybe not.
Yeah.
But like, dude, like the things that I'm able to build now, and that anyone can build now, it's next level. It is just not the same as what's been able to be built in the past. Okay, so that was SanDisk. Now let's take a look at Uniswap. And as we're going through this, I really want to figure out like value accrual to the Uni token, and I want to figure out, okay, what is protocol revenue? What is that? Is protocol revenue swap fees generated in pools or farms? Is that protocol revenue? Because I think it's not. So let's play this.
By mid-2026, the decentralized finance ecosystem operates under a new set of rules. At the center of this shift is the Uniswap protocol, which has completed a structural evolution, abandoning its original governance-only model. It has reorganized into a mathematical engine capable of capturing global network fees and funneling them directly into a central destruction mechanism. This architecture resolves a long-standing paradox in decentralized finance. It allows the protocol to extract cross-chain algorithmic revenue without distributing direct yield, steering clear of traditional securities classifications.
Hmm.
This transition rests on three key pillars. The first is the V4 smart contract architecture, an execution layer optimized to maximize capital efficiency and eliminate deployment friction. The second is the unification economic pipeline. This system intercepts trading volume and programmatically converts it into an automated reduction of token supply. The third pillar is the quantitative re-rating of the asset itself, driven by the expansion of this exact fee capture pipeline across high-volume Layer 2 networks.
And now,
These architectural and
this
economic
is talking about that hub and spoke model that they're supposed to be, that hasn't gone live yet, that they're supposed to be launching, right?
No. So the hub and spoke V4 is Aave, right? Isn't that?
I always get those. I don't know why. I always get those confused.
Let me just back it up so we can play that one more time. Then.
Okay, thank you.
pipeline. This system intercepts trading volume and programmatically converts it into an automated reduction of token supply. The third pillar is the quantitative re-rating of the asset itself, driven by the expansion of this exact fee capture pipeline across high-volume Layer 2 networks.
Okay, so what it's describing here is the mechanisms by which value accrues to the Uni token. There's different ways that value accrues to the token. That's what they're describing, yeah.
Okay.
Together, these architectural and economic upgrades form a cohesive system engineered specifically to settle global institutional capital flows at the trillion-dollar scale. Capturing sustained protocol value dictates a strict prerequisite. The execution layer must operate with absolute efficiency. In previous iterations, specifically Uniswap v3, the protocol relied on a distributed multi-contract factory model. Every single trading pair required a separate, gas-intensive smart contract deployment. This compares legacy v3 multi-contract routing against the new v4 singleton architecture. A central pool manager acts as a unified ledger. Inside, flash accounting takes over. Transient storage cells update net balances internally, bypassing external transfers. Tokens move only at final settlement. By batch processing these intermediate steps, the protocol reduces gas costs for complex multi-hop routing and arbitrage trades by 34%. Efficient pipes only matter if they capture value. The unification governance upgrade activated a programmatic fee switch, bridging the gap between V4's execution volume and actual economic retention.
Okay, need to verify this, right? This is like the thing to verify, because look, if we know one thing is true, it is that these models make mistakes and sometimes lie.
I don't think that the fee switch has gone live yet.
I think it. The answer is I don't know, but I have read that it has not gone live. I have also read that it is live, but smaller by 80% than what is eventually proposed to happen. So I don't know which one of those is true.
I'm showing from TradingView and Yahoo Finance. It looks like it's live.
Okay, is the Uni fee switch live? And if so, is it at 20% or 100%? Let's just see here, because I think it is live, but I'm not sure. There was a governance proposal. I thought that it wasn't voted on yet, or that it may have been voted down. So I just want to find out, what was that governance proposal? So it looks like Mike, what I'm reading here is that it is live.
Yeah.
It looks like the governance proposal unification was executed, and that shifted Uniswap's tokenomics from a valueless governance token, and we've seen so many of those, into an actual deflationary asset backed by actual protocol revenue. And so basically what happens is it's a part. See, this is what I've read. This is the thing. It's a partial activation. And what it does is it programmatically diverts a fraction of swap fees away from LPs and instead into the protocol. So depending on the pool fee tier, the fee switch is set either between 17% and 25% of the total swap fee, which is very similar to the mechanism that Aerodrome has set up, but different. Similar, but different. Same, different.
Yeah.
That's what's going on here. Great. Okay.
To understand this mechanism, we must differentiate between two distinct revenue streams. Liquidity provider fees remain entirely within the pool to compensate participants. Protocol fees are separate. This flowchart maps volume splitting. Protocol fees bypass the pool entirely, routing into an immutable sink known as the token jar. This jar accumulates raw asset fees. Next to it is the fire pit, programmed with a hard-coded threshold of 4,000 uni. Converting the token jar's raw assets into burned uni does not rely on centralized price oracles or internal decentralized exchange routing. Instead, it operates via a permissionless arbitrage auction. When token jar assets exceed 4,000 uni, a searcher injects the required payment into the fire pit, which instantly releases its fees to them. The fire pit then routes that UNI payment straight into the mainnet burn address, removing those tokens permanently. This specific pipeline is a legal necessity. Driving value through deflationary supply pressure insulates the token from being classified as an unregistered security.
Right. That's smart. This is very similar to what Aerodrome does too. And Jupiter does something kind of sort of similar too. So these three DEX tokens, Aero, Uni, JUP, Aero, Uni, and Jupe, actually look like pretty interesting opportunities, especially since the bear market's almost over.
Accrual is executed entirely by external market competition. The system translates trading volume into a self-sustaining economic engine, requiring zero centralized treasury management. This deflationary engine was initially restricted, but the deployment of a universal adapter, known as the V3 Open Fee Adapter, changed that. It expanded the protocol fee extraction beyond Ethereum mainnet and into 8 major Layer 2 networks. We can model the mathematical impact of this expansion. Under the early 2026 baseline, a mainnet-only capture generated roughly $26.5 million in annualized revenue. That baseline exposed a mathematical flaw. It left the protocol trading at a speculative 73 times revenue multiple, and the resulting burn rate barely offset the 20 million UNI tokens issued annually to fund the protocol's growth budget. This table projects the fully expanded fee switch. Applying a blended take rate across cross-chain volume jumps annualized revenue to $231 million.
Shit. Wow.
This compresses the valuation multiple to 8.35.
Dude, so this is the type of thing that you want to buy hand over fist. Like, buy. Like, because the revenue multiple at 8.3, this and the supply deflation from less than 1% to 11%, this is the type of thing that all of these DEXs are doing with their tokens and their tokenomics. Aerodrome is upgrading to something similar to this. Uniswap just flipped the fee switch. Jupiter is doing something similar to this.
Yeah, we covered that just the other day.
Yeah, a lot of protocols are doing this. And I mean, look, this is a cash flowing business. And because they're prohibited by law in the United States from, paying a dividend or anything like that, which would turn the token into an unregistered security, they're prohibited from doing that. So what they do instead is this tokenomics scheme, which is a virtuous scheme to decrease the supply. So if you can't pay token holders like a cash dividend, but because that's illegal, but what you can do is you can decrease the supply. It has the same type of effect. This is great. So Aero, Uni, Jupe. So far, that's on my. And which one?
And Hyperliquid.
Oh yeah. So Hyperliquid, similar type mechanism for sure. Yeah, for sure.
Aspect.
Oh yeah. The buyback and burn. Yep.
Yeah.
projecting 11% annual supply deflation. Because UNI is an Ethereum native asset, fees captured on Layer 2 networks go through a multi-stage mechanical bridge process. Specific bridged fire pit contracts automatically initiate cross-domain messages, burning the Layer 2 tokens and finalizing the withdrawal to the Layer 1 destruction address. Pushing fee extraction logic to the network's edges rapidly converts the asset from an inflationary governance tool into a net deflationary cash flow vehicle. While alternative networks capture fragmented, high-frequency meme coin volume, Uniswap's optimized architecture points toward a different sector entirely. The protocol is positioning itself as the default settlement layer for tokenized real-world assets, a market that crossed $20 billion in on-chain value by mid-2026. Institutional capital requires liability protection. By adopting the Wyoming Decentralized Unincorporated Nonprofit Association, or DUNI, legal wrapper, the DAO secured the compliance shield necessary for traditional asset managers to engage with decentralized pools. The integration of BlackRock's BUIDL tokenized treasury shares on the Uniswap X routing engine proves this infrastructure can handle institutional scale. Traditional finance institutions now utilize the protocol for atomic, MEV-protected rebalancing. They can swap interest-bearing treasury shares directly for transaction-ready stablecoins, bypassing traditional banking hours and settlement delays entirely.
Amazing.
Recognizing this transition, global banking institution Standard Chartered initiated coverage on the asset, projecting a strict re-rating based explicitly on the capture of tokenized asset trading volume. This timeline maps Standard Chartered's trajectory. Driven by institutional adoption milestones, the bank set a long-term price target, escalating from early 2026 levels up to $100 per token by the end of 2030. That target rests on a specific assumption. It requires regulated institutions to route tokenized bonds, funds, and credit products through public decentralized liquidity pools, rather than building isolated, permissioned private networks.
Think Canton. Why would banks want to operate publicly like this if they could instead do so privately on a Canton Zenith subnet? You know, so maybe it's a combination of both. You know, maybe they do both, right? But which one is going to capture the majority of the volume? I don't know. Or could Uniswap just like basically fork their DApp onto a Zenith Canton subnet? They probably could, you know, nothing's stopping them.
Well, I mean, if they're on Ethereum, wouldn't they have like that EVM to where they could use Zenith to be on Canton?
Exactly. Yeah, that's the whole thing.
Yeah.
So this is cool.
By combining the absolute execution efficiency of the V4 architecture with the deflationary mechanics of the unification pipeline, Uniswap has successfully engineered the foundational settlement infrastructure for the tokenized financial system.
So Uniswap is multi-chain. Aerodrome is about to become multi-chain. You know, these decentralized exchanges, they're going to have a massive source of new volume in the coming years. What we've got to get, or at least what the institutions need, it seems like, is that Clarity Act.
Yeah.
Mike, is there any new news on that?
I haven't seen any. I'll look it up here in a second. I was looking while we were going through that. I was looking up when the Uniswap DAO voted. So it looks like Christmas Day of 2025. The Uniswap DAO voted to flip its long-awaited fee switch. So it is, it is on.
That is awesome, and to do it on Christmas Day too, like very cool, man. Very cool.
Yeah.
And so I see the comment in the chat here about Pendle. Pendle also has a like a fee switch type mechanism. Mm-hmm. So the Pendle token. You know what? That's one we should do, Mike. We should do Pendle. At some point this week for sure.
Didn't we do one? I don't know if it's on the Intel library, but before you drop the Intel library, I thought that we had done a Pendle deep dive.
A couple months ago. I think it was one of the first ones. We were talking about PTs and YTs and the SY wrapper, but I don't think that we really went into the Pendle tokenomics. But we definitely did do some deep dive research. It's just not It's not in the Intel library. So where does Pendle sit now? Is it behind or ahead based on supply?
All right.
I'm not quite sure if it's behind or ahead based on supply, but what I think about here is, how much revenue does the protocol generate, and how does that accrue to the token, which therefore means the token holders benefit from that. And
Well,
my understanding is that
we'll do Micron and T-Rise, and then Wednesday we'll do Meteora and Pendle.
awesome, great,
Right.
yeah.
Continue.
So, but yeah, so this Pendle, the Pendle token, I really like the Pendle protocol. And if we just take a look at Pendle USDT, the token itself, I believe it's got a similar type value accrual mechanism to these DEX tokens that we've been doing deep dive research on recently, Mike. So, but we need to definitely take a look at Pendle one more time, just to see, what have they done with their tokenomics? Like, if we take a look at this, this is, the Pendle protocol here. And if we just take a look up top, so looping markets, these are for PTs. This is 150% for APY USD if you want to loop it over on Morpho. So 150% to borrow APX USD against the APX USD PT. I think this might be the APY USD PT, actually, APX protocol. So this thing is basically, it's a tokenized version of Mr. Saylor's STRC. So STRC, this one, so when you look at the chart, it definitely, gives you reason to pause, right?
Yeah.
Because this is called a bottoming tail, though. And so this big drawdown for STRC like this, my understanding was that this was driven by institutional levered players. So if you are, a large holder of STRC, and, hey, 11, 12% APY, that's great, right? But maybe that's not enough. What if you borrow?
Yeah.
Yeah. What happens if you lever that
You
up?
manipulate the market, basically.
Well, you're performing interest rate arbitrage. So if you got a big STRC position, it's paying you 12%, and then you go and you say, hey, I want to borrow against it. Let's say that you borrow against it at 4%. You got an 8-point spread. Well, how much leverage can you apply? If you apply 5x leverage, and then STRC, your collateral, draws down by 10%, you've got to immediately unwind that spread, and you're going to do so at a massive loss. So I think what we could be looking at here with STRC over the last couple of weeks here, drawing down from par, which is up here at 100, to the trough last week was 82. That's 18 points, an 18-point discount from par. So that drawdown, I believe, forced a ton of deleveraging. And I think that was the reason for the big drawdown in the first place. Now, are these dividends sustainable? Yeah. Saylor can pay this stuff forever. He's got enough Bitcoin that he can use to pay these dividends forever.
Well, and I actually had a little bit of news we didn't get to, where Strategy raised another $335 million via ATM.
Yeah, they're selling at the market, the MSTR shares. Yeah.
So basically, to give himself some more runway for those, for paying that stuff out.
100% smart move. I mean, there shouldn't be.
It gives confidence back to the STR holders.
It should. It definitely should. I think that this is an opportunity, to be completely honest. It's simply because I don't see how Saylor blows up this cycle. I do think that MSTR moves lower into the end of this year, but if we just take a look, MSTR, if it breaks support at 104, then it likely goes to the mid 70s, and that would be a great buying opportunity, because Bitcoin, I think that Bitcoin's trough, low is at 50. So I think we're pretty darn close. Last leg down, another 90 days, get to October, bottoms in, and then we start to chop higher from there. I think that once we get to Q4, then we see the trend start to, basically swing to the upside, and then we get the next bull. So does that mean STRC is an interesting opportunity here? If it's sitting, depegged by 10%, 11%? I think yes. Now, does that mean that this can't go lower? I don't know. I don't have a crystal ball, but I think that this is an opportunity, because not only would you be able to earn that 12% yield paid bi-monthly, like twice a month, but you'd also benefit from the price appreciation on the collateral. If you're buying something at 89 cents in the dollar and it returns to par, which is 100, then you make money on the collateral plus the yield, effectively boosting your yield. I like that. I like this play. I like buying STRC. And if you want to get super spicy with it,
where do you usually get yours?
This is a TradFi asset, but what I would do is I would buy this. I would buy the PT over here on Pendle. So if we take a look at the PT, and you can see that a lot of people have been buying the PT. And how do I know that people have been buying the PT? Let me zoom out here so we can take a look at this thing a little bit better. How do I know that people have been buying this PT here? Well, because the only market where you can trade these PTs is Pendle. That's the only AMM where you can swap into and out of these things. A PT is a zero coupon bond. So what that means is the yield has been stripped from it, and that yield accrues to the PT until maturity. So that means that the yield and the price of the PT are inverse. So if you see the yield go down, that means that price go up. So if the price is going up, that means there's demand to buy it, demand to swap into that PT. If the price goes down and the yield goes up, that means there's selling demand. People are selling the PT, selling the bond. These are crypto bonds. So, I think that, 14%.
How much time is left on it?
135 days, which is pretty awesome. That's into November, the 4th of November.
I might put a decent amount of liquidity into this.
So just what you could do is, if you want to earn 30% instead of 14, apply like 2x leverage on Morpho. So basically what you would do is you would hop into this, it's the Penco system, they call it. And if I was going to borrow against this, I would borrow APX USD against this rather than USDC. So if we click through to this specific market on Morpho, well, now we can see the borrow APY is 1.43%. And there's $500,000 of liquidity in this market. So you could come in size with your PTs, your APY USD PTs, and then borrow APX USD against it. And the max, the LLTV is 91.5%, which tells me that the max LTV is probably like 87%. And that means you could easily apply 3x leverage without breaking a sweat, but you probably wouldn't want to. You'd want to be a little bit more cautious in case that borrow APY right here of 1.43% spikes against you. Or
would you mind helping me sometime today, like put together like this play?
Sure. It's this is a piece of cake, man. Interest rate arb is great stuff. And so if we take a look at this one, you've got to understand what is APY USD and what is APX USD. And so this is definitely, Mike, before you jump into this, we need to perform the research on it first. So it might be a better idea for us to, at some point this week, take a look at the APX USD protocol. Because that APX USD protocol is what you would effectively be investing in indirectly.
Why don't we just do this live on the market wrap later on today?
Great, let's do it. So I think what we would need is just the deep dive research on the APX USD protocol. That's all we would need. And then we'd be able to run through the research so that we know what we're looking at. And then after we run through the deep dive research video content, then I can walk you through the APX USD protocol itself. Mm-hmm. And then on Pendle, you're basically, so you got to understand the levels of risk here. So STRC, and I see Jaysher is asking in the chat, do your previous Pendle arbitrage loops apply and tutorials apply to today, or can you do an updated deep dive? They still apply. Mechanics are the same, but can definitely do an updated deep dive for you. Be happy to do that. And I can talk you through it right now. So this loop, it's referred to as interest rate arbitrage, and what this APY USD PT is. Okay, so the APX protocol has a junior and senior tranche. APX USD is the senior. APY USD is the junior. This is my understanding of it, but we're going to learn more about it today during the 4 p.m. Market wrap call when we go through the deep dive research today. So there's two tranches, the junior and the senior, and these tranches, I believe, are backed by like a 9-figure STRC position. It might be STRC and SATA. In fact, I think it's a combination of both, Stretch and SATA. And so Stretch and SATA, those are the TradFi regulated products, right? So Stretch and SATA are the TradFi regulated products. That's like the underlying. But even those products are complex derivatives built on top of Bitcoin. So you've got like Stretch and SATA are a derivative, kind of, sort of, complex credit product. And then you've got the APX-USD protocol, which established a position in Stretch and SATA and then minted APY-USD and APX-USD. And then, so you've got a derivative on top of a derivative on top of a derivative, and then they bring it to Pendle. And once it gets to Pendle and you strip the yield from APY-USD and also do the same for APX-USD, then all of a sudden now you've got PTs. So you've got a 4-layer cake there, okay? Mm-hmm. You got the original underlying asset, which itself is a complex, credit derivative product. On top of that, you got, this APX protocol, and then on top of that, you got Pendle. So that's actually 3 layers. So it's a 3-layer cake here of, basically risk. So you just got to understand that 14% fixed yield does not come without significant risk. Mm. But you get compensated for taking that risk, right? So if you're over here and you want to earn 14% fixed, great. Swap into the PT, earn 14% fixed. If you want to, get a little bit more picante, a little bit spicier with this thing, then borrow against it, and you could do 80% if you really wanted to lever it up. I wouldn't try to do 150% just because I don't think that's a good idea. Too much risk. Mm-hmm. But if we take a look at the price of this thing, it's actually, if we just the daily. So this price, this, you could apply a lot of leverage to this actually. If we're talking about like the price has been 92.5 or right now 95, like we haven't really seen this dump. And so if it were to dump from here and you were levered up, that would be a problem for you. But if you're not super levered up, then you could even weather a dip out of this. So I like this play. And for 135 days, this is nice. It's very nice.
Very, very nice.
It's a very nice. So dude, I like this play a lot. You could easily easily push this to like 100% APY for like the next 6 months if you wanted to. You've just got to believe. Do you believe, Mike? Do you have the faith?
Believe.
Do you have the faith, Mike?
I can fly.
There you go.
I believe I can touch the sky.
Yeah, you don't want to fly too high though. Wings might fall.
Be like Icarus and fly too close to the sun and get burned by some yield.
Don't want to get burned by the yield, man.
Right?
So, Mike, we got 10 minutes left. You want to spend a couple minutes and run through their socials?
Yeah, let's take a look at that. Let's see. Let me share my screen. All right. So, anybody that's interested, we appreciate y'all for tuning in. Got some good viewers over on the arena and on all the different platforms. If you would like to help support the channel, cost you nothing. Come on over here to YouTube at the Node Network, all one word, and just give us a like if you find any of this information that we put out valuable. Subscribe if you want to watch the show each morning or any of our other shows, and and share it. If you know anybody that you think that would get value from it. So that's the most powerful thing you can do to help us grow the channel and get this information out there. The most important thing that I want to share is this. So this is our official website, the Node.pro. David has built this out and done an amazing job doing it. But this is where you can find all of our offerings, and most of them are no cost to you. So we have a full DeFi university from beginner to advanced, where you can come in here and learn all about these assets and wallets and protocols, everything at no cost. There's no catches, there's no gimmicks. You can just start learning, and it's all professionally put together with videos, reading materials, checks on learning. There's tests and quizzes to make sure that you're absorbing the information. All here, all no cost. The Intel library. So you just watched us do the deep dives on Uniswap and on SanDisk. Here soon we'll be doing it on Hedera, but you can see, we did Jupiter, we did Solana, Privy, Turnkey, Fireblock, Securitize, a bunch of that we've already done just like in the past month. We're doing 2 of these a day, Monday through Friday. So all of them are going into here, and all of them are focusing on the things that we focus on. That we as token holders, does that token have value capture? Does the token have a direct correlation or a share in the profitability, the revenue and the fees that these projects are generating, either a protocol or a network. This is what we're focused on. It's not to say that it's going means it's the only way that you can make money. There's still a lot of speculation in these markets. You can make a lot of money, off speculative pumps and dumps. We are focusing on long-term investments. We are looking for the projects with legs, the ones that are going to be around 10, 20, 30 years from now, that we are going to share in the profitability of those. That's why we focus on Uniswap and potentially Aerodrome and Hyper.
Aerodrome for sure. Aerodrome, yes. Uni, yes.
Yeah, there's a lot of these that are showing great promise, and the ones that don't, like Uniswap being one of them, they recognize this, and they had that DAO vote on Christmas that they passed and turned on their fee share. So a lot of these kind of older protocols and older chains are recognizing that they
Scotty D. Yeah, I'm on board with Aero now, brother. That's right, brother.
It happens. We all evolve. I mean, I was bullish on. Some of it I became bearish on, and I switched up. There's some stuff that I was bearish on, and I've turned bullish on. Because these projects evolve, and we have to evolve our thesis and our thinking as we get new data. And like I said, that's why come a week from today, we're having Crux of Crypto on. Great guy, again, fellow vet, and he feels that we missed some things when it comes to the key to tokenomics. I'm excited to see what he brings. I really want to change my mind on it. I have a small moon bag just in case, but I sold most of my Kita based off the deep dive that we did and some follow-up research that I did. But the AI newsletter, David's still working on this, but you can try it at no cost. Just go in here, put your email in, and you can generate a sample. and try it out. There's still a lot of really good info. We're just making sure that it's dialed in so it's perfect every time. The community. We were talking to a gentleman in the chat. If you want to join our no cost Discord, this is where you can do it. But we're always in there. If I'm awake, I have it open on my desktop if I'm sitting here working, and happy to help anybody with questions, comments, concerns. Just go ahead and jump on in there. We've gotten to where we're getting 5 or 10 new people joining per day. It's our community is really growing. I've been happy to see it. There's also a premium channel in there. So if you want to join this, on Mondays, Wednesdays, and Fridays, we have a paid call. It's one of our few paid services, but you can join these paid calls. And again, on the website, you can sign up and you can try it out at no cost for a week. So you can join 3 of these calls at no cost. You're not obligated, but you can sit in. And David usually gives like a quick lesson, and then him and the rest of the community of success, people in different stages, but they can share. It's an open forum. They can share different DeFi strategies or different positions that they've gotten in, and if they've been successful or not. So it's a great place to learn from your peers, and a great place to potentially find somebody that could be a mentor. Somebody that you could talk to about helping you along on your journey. So, and then on that note, we also have David's coaching. So if you don't want to have to hunt and get to know somebody and convince them to mentor you, you can pay for David to mentor you one-on-one. Very personalized, very bespoke. But if you want to have a no-cost consultation, go ahead, put your email in, set up a time to do a call with David. He'll sit down with you, go through your portfolio, go through your risk profile, and get an idea of what you're trying to accomplish and where you're at knowledge-wise. And he may just point you towards the no-cost, DeFi University. Have you go through that first, get as knowledgeable as possible to make sure that you get the most extractable value out of the experience, the one-on-one coaching. But again, great service that we offer here. And then, of course, if you want to just support the channel, we have T-shirts, hoodies, hats, things like that you can buy to just help support the channel. And it's of course not required, but definitely appreciated. But again, to end, the most powerful thing that you can do to help this channel grow is to come over here to YouTube and just like the lives that we do, make a comment on them, subscribe to the channel, and share it out. That's really the most powerful thing you can do to help us grow and help us get this what we try to make quality education and quality content. Because again, we are not influencers. We are not trying to influence you to do anything. We are educators. We are here to educate you and often educate ourselves and learn together. That is why we're here. We all need to evolve and learn. We do it at the same time as you sometimes. We're going through some of these deep dives, and sometimes by dissecting those deep dives, because of comments that we get from all of you in the chats and on X, it makes us dig deeper. And sometimes we find that we get things wrong. And when we do, we're gonna put that out live. We're not afraid to admit we're wrong. I want people to show where we're wrong. I want people to engage and help us all learn and grow and become more knowledgeable about these projects. So with that, David, any closing thoughts?
What I've learned over the last 5 years of being full-time in crypto and DeFi is that you really, really need to dig into the tokenomics of these things to be able to perform well, consistently anyway. And you also got to be patient. So building that skill set takes time. And if you want to speed up the pace at which you build that skill set, learn from me. Learn from someone like me who is full-time in this space, lives, eats, sleeps, and breathes this stuff. So what working with me one-on-one would allow you to do is avoid making costly mistakes. I will help you build a skill set, but I'm not a financial advisor, so I can't tell you what to buy and sell. I can, on the other hand, educate you so that you can avoid making some costly mistakes and take that skill set that you learn, use it to make money for yourself. So if you want to do that, I'd love to help you do it. And yeah, like, share, subscribe on YouTube. That's the way to help. So
Absolutely. All right. Well, we appreciate y'all, and me and David will chat, see about doing something with the market wrap. Maybe entering one of these positions or something like that. If he feels like that it might be a little bit profitable, I wouldn't mind deploying a little bit of liquidity and earning some yield.
liquidity.
Getting the itch. I'm getting the itch. So, all right. Well, we'll talk to y'all later, and if you would, join us for the market wrap at 1 p.m. Pacific, 4 p.m. Eastern. And until then, Veteran Crypto out.
Peace.